You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon and welcome back. Today's Wednesday, Fed Day, 18th day of June, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live training room. So that one's private, members only, and those taking their 1-week free trial. If you've not yet taken your 1-week free trial, when Michael joins us top of the hour, he'll walk you through step by step how to take it, how to fill out the form. We'll get your indicators up and indicating today. Now, tomorrow's a holiday, so your trial will actually begin officially on Friday. The weekend doesn't count against you, and we're going to give you all in next week. So really, you'll get 6 days instead of a 5-day trial. There's no credit card required. We want you focused on what's being taught, so that at the end of the trial, you can make a well-informed, intelligent decision whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page, and you'll see noon broadcast. Click that link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link, 12 noon Eastern. All you have to do is click the link in the email, and it'll automatically log you into our platform. Now, the reason that's the best way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, maybe on vacation this time of year. And some days you'll be busy, can't join live, but want to get caught up later. Well, the good news is you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our little corner of the world, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it will allow you to see how we've evolved over the years. youtube.com/CFRN. Our daily schedule for the afternoon broadcast is posted right here. So we're going to get after it and start with our daily devotional, as we do every day. The topic we're on now, we're on day 3 of 6. Why trust the Bible? Today's scripture is Colossians 4:16, and I'll be sharing that from the New International Version. After this letter has been read to you, see that it is also read in the church of the Laodiceans, and that you in turn read the letter from Laodicea. Again, that's Colossians 4:16. So, a question that many have: didn't a group of men decide what would be in the Bible? So today we're going to tackle this question of who decided what should or shouldn't have been put in the Bible. We may well have in our possession well-preserved writings from authors based on eyewitness accounts. But skeptics and believers alike might wonder, hasn't what survived essentially been selected? In which case, the prejudices of the selectors will have determined what we're reading. Is the Bible the ultimate power play? To answer these questions, it's important to know a bit of early church history. The first century church grew at a phenomenal rate and spread over the breadth of the Mediterranean world, flourishing across Europe, Asia, and Africa. Letters were the means of communication between these distant congregations. The apostles would write messages and, as today's passage illustrates, tell the congregation to share them with believers nearby. The tradition of sending, copying, and sharing letters means that today we have distinct streams of New Testament manuscripts in great numbers from different places around the globe, dating back to the time of the events they record and preserved in various languages. As the writers instructed, churches shared and preserved these letters and gospels from the time the apostles were in their midst and the documents were being written. And we have evidence that almost immediately these letters and gospels were treated as authoritative and scriptural. The writings of Clement, the Bishop of Rome, Justin Martyr, Athanasius, and other early church followers read to the various books of the New Testament as scripture. These individuals didn't choose what was or wasn't scriptural. They merely recognized what was already widely and unanimously accepted by the worldwide body of followers. Eusebius, born in 270 AD, gives us some insight into this when he distinguished between 3 categories of writings. Number 1, books universally acknowledged as scriptural. 2, books whose scriptural status was disputed by some. And 3, books which should be rejected as spurious. Christians didn't begin to regard the various books as authoritative simply because someone decreed that they were. The Gospels and all the other writings were exactly that, agreed by already. Where the inspiration of books was challenged, as in the case of James, Jude, 2 Peter, 2nd and 3rd John, and Revelation. These queries were dealt with openly, and all evidence was duly and communally scrutinized. It's crucial to understand that the church didn't choose the biblical canon. Rather, it officially recognized the inspiration of certain books. The divine authority of the 27 books of the New Testament was organically and generally accepted by the worldwide body of believers before being merely confirmed by church council leaders in the first few centuries after the death and resurrection of Jesus. We've already acknowledged that there's something radically organic and grassroots about the Bible. Knowing how its contents were widely and unanimously acclaimed as God-breathed should make us more confident than ever that this book can be trusted. Now, I know AI's changed a lot of things, but step back a year or two before AI was what popped up first on a Google search. If you knew anything about the internet and Google, when you searched for something or searched a query, whatever it is, the first couple of things that pop up on the page would say sponsored. That means those were advertisements. Some companies, CFRN is no different, paid to make sure that the first thing you see was what they wanted you to see. So, you quickly learned that when you search for something in Google, you scroll down past all the ads, and then what you found were organic results. See, nobody paid for those to be there. They were there because so many people had viewed them, studied them, and over time their rankings rose in the algorithm. And so today, I know when you search on Google, you get that AI pop-up. Then below that are the paid ads. Scroll on down. See what the grassroots organic results are. That's where you're most likely to find truth. Let's pray. Heavenly Father, thank you for the gift of your word, which brings wisdom, encouragement, and life. As we receive it, may we not keep it to ourselves, but share it faithfully with others. Help us to be a community that values your truth and builds one another up through the scriptures. It's in Jesus' name we believe and pray, and everybody said, amen. Amen and happy Fed Day. Now at 2 o'clock, we're going to get the Fed announcement. There'll be some volatility, but that's just the beginning. At 2:30 Eastern, Jerome Powell, the Fed head, will deliver a prepared statement. That'll create a little volatility. And then he'll begin to take questions from the audience. That's when it'll get real volatile. Now, for those of you that are new to the markets, new to trading, it hasn't always been that way. What the Fed did was typically very secretive. There were no press conferences, there was no Q&A. They just put out the decision, and that was that. My, how times have changed. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 163 points. NASDAQ's up 105. S&P 500 is up 22. And the Russell 2000 is up 21, which for the Russell, that's 1%. Awfully bullish ahead of this Fed. I don't know what folks are hoping for, but we'll know what we get at 2 p.m. Eastern. All right. In the commodity basket, crude oil is down $1.06. Make that $1.03. Trading 73.81 last. That's a drop of over, well, it's almost 1.5%. Gold is up $3.90, trading 34.10.80 last. Silver down 17 cents, trading 36.97 last. After the incredible rally we've had in silver over the last few weeks, we know retracements are going to come. So to be down 18 cents, in my book, that's as good as being up. In the Asian markets, at the close, the Nikkei posted a gain of 348 points, almost 1%. Shanghai rose 1.5. The Hang Seng fell 266 points, almost 1.25%. And in the European markets, at the close, FTSE up 9, the DAX down 116, the CAC down 27. So we had a mixed day in Asia. It was a mixed day for the UK. But so far, it is a big green radio Wednesday here in the US of A. Now, based on what happens this afternoon, that could change. Let's go to the global news. President Donald Trump called on Iran to unconditionally surrender yesterday, saying the U.S. knows the location of its leader in hiding, the Ayatollah Khomeini, but will not target him at this time. The comments came after Trump returned early from the G7 meeting in Canada for a Situation Room meeting. The U.S. has not formally entered Israel's 6-day-long war with Iran, though the military has relocated assets to the Middle East. Since Friday, Israel said it has achieved air superiority over Tehran and destroyed 1/3 of the country's ballistic missile arsenal. Israel also said it killed the country's top military commander, appointed to the role after Israel killed his predecessor. Man, they're going to have a hard time filling that job. Israel has targeted military and nuclear installations across Iran, including its underground nuclear facility in Natanz. Key elements of Iran's nuclear program are believed to be in its Fordo nuclear facility. Now, this thing is buried inside of a mountain. A strike on that site, buried 260 feet into the mountain, would require the use of U.S. bunker buster bombs. And this morning, the Ayatollah made a statement: "We will never surrender." So I messaged him my condolences and said I hope you enjoy your Vestal Virgins. I'm not a sports guy, but some of you are. The Florida Panthers secured their second consecutive Stanley Cup last night, defeating the Edmonton Oilers 5-1 in Game 6 of the NHL Final, and becoming the third team since 1998 to clinch back-to-back titles. Now, when you think about it, a hockey team in Florida, if you've ever been to Florida, it's a little hot and a little muggy. And hockey requires ice. I know there's indoor ice rinks. But once upon a time, Phoenix had a hockey team, which I thought was odd, called the Coyotes. And somebody bought them and they moved somewhere else. And now the arena where they used to play is used for concerts. In fact, I saw Sean Hannity live in that arena a decade, 2 decades ago, I think. Back when he was just a radio guy. Kraft, as in Kraft Foods, or Kraft Heinz, you know, the ketchup you've loved since you were a child, said yesterday it will remove all artificial food, drug, and cosmetic dyes from its U.S. products by the end of 2027, becoming the first major food company to commit to the shift since the Food and Drug Administration announced plans to phase out synthetic food colorings. The company, whose brands include Jell-O, Capri Sun, and Kool-Aid, and a whole lot of other stuff, said nearly 90% of its U.S. products by sales volume are already dye-free, and it will stop launching new products containing petroleum-based additives, effective immediately. The move follows pressure from the FDA and Health and Human Services Secretary Robert Kennedy Jr., who are urging food makers to voluntarily eliminate synthetic dyes by the end of 2026, citing concerns about potential behavioral effects in children. That includes red 40, yellow 5, and blue 1, which together make up 90% of all dyes used in the U.S. Kraft Heinz already uses natural alternatives like beet juice and vegetable extracts in most products sold in Canada and Europe. In fact, in Europe and Canada, if a product has synthetic dyes, it requires a warning label. You know, like the warning label on a pack of cigarettes. Eat this and you might die. So, Europe and Canada were way ahead of us on this. All right, moving to Wall Street. And this is called the rally Wall Street hates. Stocks have come under pressure in recent days, but continue to hover near record highs, staging a ferocious comeback since their April lows. Despite the rally, investor sentiment remains cautious as markets contend with a wave of uncertainty ranging from Trump's tariff rollout and its inflationary ripple effects. Inflation's down. To the Fed's murky rate-cutting path, and most recently, renewed geopolitical tensions in the Middle East. Now, you never thought you'd hear that. A rally that Wall Street hates. Okay? A fresh candidate is vying to become the ultimate first world problem. Is the new Chase Sapphire Reserve, the first viral credit card, still worth the $795 annual fee? Can you imagine paying $800 to carry a card that has some crazy interest rate because of the Fed? It's a premium cardholder's dilemma, but it's also a lagging economic indicator, a sign of the heightened competition for affluent consumers, and a stark reminder of the labor market dichotomy, where things are decent if you have a job and disheartening if you don't. Well, once all the illegal citizens are out of the country, plus we got so many new jobs coming because of the foreign investment that Trump has brought into the country. The Federal Reserve today is widely expected to hold rates steady at the conclusion of its policy meeting, but the big question is whether Jerome Powell and his colleagues will stay committed to 2 rate cuts in 2025. The answer will come in the form of the dot plot, a chart updated quarterly that shows each Fed official's prediction about the direction of the central bank's benchmark interest rate. The last dot plot released in March revealed a consensus among Fed officials for 2 cuts this year, as some were already factoring the uncertainties of President Trump's economic policies into their projections. They made the same prediction last December. Well, we'll find out more today. Now, do any of you own Circle? That's a stock. Well, from Reuters, the total market capitalization of stablecoins surged to a record high today, as the U.S. Senate passed a bill yesterday to regulate the sector, a major step towards legitimizing a once niche but now fast-growing corner of the crypto market. According to CoinDesk data, the market capitalization of stablecoins hit an all-time high of $251.7 billion, up 22% so far this year. Now, a stablecoin is pegged to the dollar. From Bloomberg, new U.S. residential construction declined in May to the slowest pace since the onset of the pandemic, as an elevated inventory of homes for sale and high mortgage rates, that's the key, sap the motivation to build. Now, here's what's going to happen. Home builders have stopped building because of these high interest rates. So when the Fed finally does lower the rates, house prices are going to skyrocket, and builders are going to be falling all over themselves to start building again. So if you're a fundamental type investor, you might want to look at some of the home builders. There's probably some bargains out there. Broadcom, have you heard of it? For more than 2 years, conversations about the biggest, most important technology companies have revolved around the same 7 stocks, the Magnificent Seven. Now some on Wall Street are making the case that Broadcom should be part of that discussion. It's up 340% since the start of 2023, vaulting it into an elite cohort of stocks with a market value of at least $1 trillion. Meanwhile, Tesla, one of the original so-called Magnificent Seven stocks, has tumbled 22% this year as CEO Elon Musk's foray into U.S. politics sparked a backlash against the electric vehicle maker. First they love him, then they hate him, then they love him again. Oh my. Iran's supreme leader, I already told you this, the Ayatollah Khomeini, rejected President Donald Trump's demand for complete capitulation and predicted irreparable damage if the U.S. joins Israel in bombarding what's left of Iran. The Americans should know that the Iranian nation is not one to surrender, Khomeini said in a statement published on his official website. Any military incursion by the United States will undoubtedly result in irreparable damage. Yeah, to Iran. Oh, we may take a hit somewhere, here and there. Crude inventories fell sharply. We got crude inventory numbers today, posting the largest decline in a year, while gasoline and distillate inventories rose. Crude inventories fell by 11.5 million barrels to 420.9 million barrels in the week ending June 13th. Now, analysts' expectations in a Reuters poll called for a 1.8 million barrel draw. And we got a draw of 11.5 million. Wow. Talk about a swing and a miss. And last from Wall Street, Iran's largest crypto exchange, Novitex, said today that it was hacked and funds have been drained from its hot wallet. Never keep your crypto in a hot wallet. In a statement on its website translated by TechCrunch, Novitex said it detected unauthorized access to its infrastructure and hot wallet in which the company stores a portion of its customers' cryptocurrency. If you don't have the keys, it ain't your cheese. The company said it was investigating the incident and that its website and app would be unavailable for the foreseeable future. Now, I'm sure none of you had money in an Iranian crypto exchange, but a whole lot of people just got a whole lot of broke. And I'm not happy about that, but come on, use common sense. Let's go to the local news. What do you say? Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We're currently in week 359. Over the last 359 weeks, we have issued over 19,950 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of those alerts being stopped out based on simple market structure and a process we teach all of our passport holders. Valerie did this recap this morning at 7 a.m. Eastern. I have put out some additional alerts since then, so of course she'll reconcile everything this afternoon as she does every day. But at the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 46 alerts, still waiting on the outcome of 15. That gave us 31 actionable alerts, of which 1 or 3% would have been stopped out, again based on simple market structure and the simple process we teach all of our passport holders. Every logic alert has an entry price, an initial target, usually additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is our night session, and vice versa. Yes, you can trade them, but the real reason that I spend the time creating the alerts is to help you learn how to read the chart. If you're going to be a doctor, you got to read the medical books. If you're going to be an attorney, you got to be able to read the law books. If you're going to be a trader, you got to be able to read the charts. But, the chart doesn't have any words, sentences, paragraphs, or punctuation. It's a completely different type of language. And until you can read that language, the chance of becoming a consistently profitable trader is rather slim. Now, 359 weeks, that's certainly a very long time. But many years before we launched Logic 247, we had our original alert service, the Concierge Trade Alerts. And they are different. Whereas the Logic alerts come out around the clock, the CTAs are published typically 5 minutes before the Globex Open. So today's the Wednesday session, but it began last night at 6 p.m. Eastern. That's when the markets open. So all of our members, all of our traders, even our trial members, had all of these targets 5 minutes before the market opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and you see these long targets and short targets, just remember our traders had these numbers 5 minutes before the market even opened. So with that, we can go to my favorite part of the broadcast, the charts. The charts. Okay. And we'll start with the S&P 500, the bellwether. This is the daily chart. Now, remember we were in a big downtrend, and then they talk about how the market turned around. See, coming down, you had a leg and a retracement, a leg and a retracement, a leg and a retracement, leg and a retracement, and then a leg that failed to put in a lower low. Once we got back above that green line, we got a leg and a retracement, a leg and a retracement, a leg and a retracement. Now that green line, you're probably going, what the heck is that? It's called the BBC. It just stands for bull, bear, cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did on April 24th, we're now bullish and expect higher prices. Price always reverts to the mean. No matter what methodology or strategy you use, price always reverts to the mean. I'm sure you've heard that phrase. Maybe you didn't understand what it meant. Okay. Well, as you can see, when price reverts to the mean or pulls back to the BBC, that's our language. Okay. The pullback holds more often than it doesn't. So we got this big leg, and then we pull back to the BBC, and it held. And we got another leg, and the pullback held. And we got a big leg, the pullback held. Then we got another leg, and this first it held, and then on the 24th it didn't hold. That's when we shift from a bearish mindset to a bullish mindset. And the pullback held, and the pullback held, and the pullback held, and now we're trapped. The black step line is directly above price. That's resistance. Then above that is blue and climbing. And because it's directly above price, that's potential resistance. And then over here, this high from back February 26th. Look familiar? 61.2875, 61.34. Huh. Pretty close, right? Now, we've been talking about this for months. Okay. So we hit that area that we knew would be most likely good resistance. When the market finds resistance, it's going to go look for support. And we know the pullback holds more often than it doesn't. So support sends us up to resistance. And resistance is now in the process of trying to send us back down to support. Now we held once, twice, thrice. Does that mean this time we're going to hold? No, it does not. But we expect it to hold until proven otherwise, like here and like here. See, back here, the pullback held, and the pullback held, and the pullback held, and then finally, it didn't hold. Okay? Now, daily charts are important whether you trade stocks, futures, crypto, Forex, ETFs. Institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, whatever it is you trade, spend 2 minutes with the daily chart before you drop to your smaller time frames and actually start trading. Number one, it gives you a look over the shoulder of the deep pockets that move price. It's much easier to swim with the flow than against the flow. Yeah? Okay. So, you see what the deep pockets are doing on any given day. They're selling. Right now they're buying. But by looking at this chart and that black step line, we see that they tried to overcome it and failed. And they're just kind of stuck right there. And they could remain stuck there until the Fed announcement comes out. We don't expect the Fed to cut. We don't expect them to raise. But we never know how the market will react. Really, what everyone's going to be listening for is not the actual Fed announcement, but the prepared statement and the Q&A session. Because the big question, as we already said on this broadcast, are we going to still get at least 2 cuts this year? We're already through half the year, pretty much. Of course, Trump wants a 1%, a full point cut. But because him and Jerome don't get along, I don't expect that's going to happen. Never know. You can get surprised. The Fed has become very predictable. But back in the day when there wasn't these press conferences and Q&A sessions, when they just made the announcement and that was it, and sometimes there were surprise hikes and surprise cuts. I've seen the S&P swing 100 points in one direction and 100 points in the other direction, and then 100 points back in the other direction in the span of 5-10 minutes. Financial suicide to try and trade the Fed announcement. Just get some popcorn, climb up in the bleachers, watch the action, and when the market finally calms down and gets back to its normal rhythm, then you can go to work. Okay. All alerts, logic, and the CTAs are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it's not broke, don't fix it, so I've left it alone. Now, the vertical lines separate today, Wednesday. Here's Tuesday. Back over here is Monday. The horizontal lines are the weekly trading zones. Those are published for our members every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published these zones for our members for 15 and a half years. So, now remember, our members and trial members had these targets 5 minutes before the market opened. And this was the opening candle last night. It's a 30-minute candle. And, oh, by the way, this window that I drew live on the broadcast yesterday, remember we were keying it off data from, let's see, this is Wednesday, Tuesday, Monday, okay? We were using Monday's data. You look as far left as you need to. It filled once, it filled twice, it filled 3 times, and then 4 times. And then once we got through the zone, see, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. So we got through the weekly zone, we hit the short target, and then we ground to a halt at the top of this window, which I drew live yesterday, keying it off Sunday night's data. Okay, this was the Sunday night open. And now, isn't it interesting how price came right down to the top of the window, ground to a halt, did an about face, and the pullback held. Resistance will send the market looking for support, but you found at the zone 6033/34. So we get above the BVC, and then the pullback holds. And there was a logic alert for this move here, and there was a logic alert for this move here. So whether you were trading the CTAs or the logic, well, you got your goal for the day. We run up to the long target, which was based off this right here. See where blue turned to red yesterday? That's the long target. Okay. Now the short target, that was based off right here. See where red turned to blue back on the 15th? So we hit the short target, but then we stopped at the top of the window. Reversed, hit the long target, and now we're in a retracement. Remember, price always reverts to the mean. In our case, the mean is green. It's called the VVC. Now, the fact that the step line and blue and climbing are both directly above price, that's resistance times 2. And here's support. So whichever way the market goes, this window from yesterday, which hasn't been filled, is still valid. And if price starts to drop, this window is still valid. But I can throw you another window right there. That's if the pullback doesn't hold this time. Okay. We're talking 60.42 down to 60.36. That's 6 points. You only need 2 points to get your goal for the day. So let me do this. Let me see if I can stretch this without mucking it up. I said muck. There we go. With an M. All right. The Dow. Now, the indices mimic each other so profoundly. Look what happened. See, we did the same thing with that big window. Price stopped right at the top of the window. That's after we hit the short target. So in the first 30 minutes last night, you could have had your goal for the day. Come down to the top of the window, do an about face, and the pullback holds. And it holds, and it holds, and it holds. And then finally, we get through it. So we get a leg and a retracement. The pullback holds. We get a leg and a retracement, and the pullback didn't hold. Now, this is not a spot I would necessarily have called for support. But remember, out of those 19,950 plus individual handcrafted alerts in the logic channel, what we've experienced over all those alerts is 20% or less being stopped out on a weekly basis. So we freely admit we do not know what's going to happen next in the market. Nobody does. No man, no machine, no algorithm, no AI, no nothing. I know they tell you, oh, buy this AI thing and you'll be, floating around on your yacht before long. Right, okay. So if there's no way to know what's going to happen next in the market, how do you make money? Because you learn to read the chart, understand the language of the markets, right? And then you know what the next high probability move is. But about 20% of the time or less, the market will do something other than the next high probability thing. I can live with that. So price hits the long target, cruises through it, takes out these highs right here by just a little bit. And we're always skeptical of just a little bit. Price is now pulled all the way back to the BBC where it found support. So far the pullback's held, but it's got resistance times 3 overhead. The weekly zone 42,715/20, blue and climbing, and the step line. It's going to take a lot to get through that resistance. That announcement would certainly be enough fuel to make this thing explode in both directions. The Russell. Yesterday, live on this broadcast, we drew this window of opportunity. Now, the first time we penetrated the window, we didn't make it to the bottom of the window. That's going to happen, okay? But then we came down again and we hit the bottom of the window perfectly. Bounced back to the top of the window and did it again. And then when the markets opened last night, we did it again. We hit the short target, and then we went on to hit this big window, the very bottom, and that was based off Wednesday, Tuesday, Monday, but this was Sunday night. Came right down to the bottom of the window, did an about face, retraced back to the BBC, and then filled that little window again. Hit the zone support, which bounced it up to the BBC, which sent us down to blue and climbing support. Blue and climbing got us above the BBC, so we had a leg and a retracement, a leg and a retracement that didn't hold. So we hit the short target again, okay. But these lows right here, it's right there. So support now is going to send the market looking for resistance, which it found at red and falling, which sent price back down to the zone. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. Remember, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Okay. So we filled that window, and then last night we filled that window. Both windows drawn live yesterday on this broadcast. Now, what do we got? After this pullback, we ran all the way up through the long target, and price stopped right before entering that window. because that high right there is that high right there. What's that high? 21.44 half, 21.45.20. Pretty close. Now I want you to look at the black step line. You see how on this big move up, these two are parallel to each other. You got price, then you got the black step line, and then you got blue and climbing. But because price has consolidated here, unable to take out that previous high, you see how the step line is now hooking to the right. Once that step line gets on the right side of blue and climbing, that's our signal that price is going to attempt to retrace back to the BBC. Of course, we expect it to hold until proven otherwise. If in fact price does trade through the BBC coming down, be aware of this bullish cross right here. Okay? A bullish cross is when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it'll almost always be good support. That is just so important to learn. NQ, we drew this window yesterday live based off this right here for Monday. And we tippy-toed into the window and got rejected. Gonna happen. Then we opened last night, filled the window, came all the way down to the zone, which we expect to be support till proven otherwise. Support sent us to resistance, so we consolidated at the BBC for hours. Then we made a run up to the long target, and the long target was based off the bearish cross. That's when the red line gets below the green line. Leads to an extended move. The first time price revisits that area will almost always be good resistance. It spiked it a little bit, but it did its job, right? So then we do some sideways consolidation, and we reach down and try to touch the short target again. We didn't quite make it, but this was a huge red candle. And I put out a logic alert. Everybody had a chance on the NQ to take advantage of this short move. Now, buyers came in just above the short target and ran us all the way up to the zone. See, we had support at the zone, and then we had resistance at the zone. That's how it's been working for 15 and a half years. All right, we've covered the indices. We'll pick up with crude when I come back. But Michael has arrived. He's going to give us a recap of everything that happened this morning in the live training room. Then we'll do a little bit of live trading on the TradingView platform. I'll come back, finish the recap I was doing, and wrap things up with our good word for the day.
All right.
It looks good.
All right, here we go. All right. Good afternoon, everyone. Today is Wednesday, the 18th day of June, 2025, FOMC day. All right. If you've not taken a free trial this and you want to go here to mytradingIQ.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. Once you click on that, you're going to be brought to this registration page. On this page, all that we ask for is your name, your email, your phone number. Down here at the bottom, you want to make sure you give us a TradingView login ID. Okay. We need the TradingView login ID to enable the indicators for you, so your indicators can be indicating, so you can be following along and taking trades with us if you want to. All right. If you don't have a TradingView login ID, click on this link right here and go get one. All right. That's all you have to do. Click on that link, follow the instructions. It brings you, actually that link brings you to this page. Just follow the instructions right here in this 3-minute video. Okay. You can end up clicking on that. That's going to bring you to this. And look, they put them all out. That's new. That's new. They didn't have this before. And the upgrade to expert is actually only 99. It's only $50 more. That used to be a lot more. They dropped the prices significantly on that. Anyway, and it looks like they're having a sale right now too. It's $49.95. It's cheaper than, I think it's cheaper than what it normally is. Yeah, they're having a sale. It's $12.95. It's cheaper too. I guess you gotta go to monthly. That's what it is. You gotta go to monthly. Either way, go here and pick out what you want. We use premium, right? We use premium and we have it on the annual plan. That's why I said switch to monthly. But you can get by with plus or essential. You can make it work with basic, but you can be really, really limited with basic. And the way that they work it, just so you know, if you plan to use their data, then you might as well get the essential, right? Because if you have basic and use their data, the data costs like $30 a month. But if you pay for the essential and you use their data, the data is $7 a month. So you end up paying, $22 a month if you use the essential, which gives you a lot more than the basic, and you have the data, as opposed to paying the $30 and you have a very limited basic and you have the same data. So it's cheaper to use the essential and get more features. Okay. They do that to encourage people to sign up for something. All right. And now they have probably over 100 million subscribers. That's a lot. All right. What we did today. Today, as I said, is the 18th day of June 2025. We made 75 ticks on the NQ. We were -1 on the Russell. Plus 43 on gold and plus 11 on the ES. So put us at 937.5 on the morning session. Today it took 12 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,150, and we took a total of 18 trades this morning. And so we had some longer days this week. We were getting some really short days right up until this week. This week, it slowed down a little bit. And I was back to 1 trade today anyway, which was good. So total out of 11 days, 1, 2, 3, 4, 5, 6, 7, 8 out of 11 days, I got it on the first trade. And I could have done it on 9 out of 11. That day there, I could have done it. I'm not so sure yesterday. Anyway, that puts us at $937.50 with 1 contract this morning. On the month now, we're at $9,430 over 11 business days, averaging $857 per contract to our business day. On the year, we're now at $149,900 over 102 business days, averaging $1,469 per contract per 2-hour business day. Following the 24/20 blueprint, if you were to quit trading when you get the goal for the day and add 1 contract per month, that means for every $2,000, you add a contract, roughly. Okay. If you did that so far this year and you traded just like I did, you would only have had worked 12.81 hours and 12.81 hours, and you would have had a profit of $55,827. You'd be on your 6th contract right now. You'd be at $55,827, averaging $4,355 per contract per 2-hour business day. We are so close right there. Anyway, the trades. So you see we have this thing on here, right? That's part of the TV Trades range trigger right now. Right? That's where I got it situated right now. I don't know, logistically, we're going to have to figure this all out, but that's where it is now. Basically, all that does is it shows you what you already have. It just simplifies where to draw the retracement levels from, to and from. When you blow, you can draw it like that. So puts the midpoint right there, retracement level right there, all that stuff. It just does that stuff. It simplifies it for you. That's all. It doesn't add anything other than simplifying what's already there. So making it easier to read. Now, that said, let's get into the actual trades that we did. We'll start out with the NQ. I guess we just start out with the gold. All right, our trades on gold today. Here they are. We really only had that many trades. We had 5 trades on gold. So our first trade on gold was right here. We picked up 1 tick on that, and then we picked up 11 ticks on that. That put us at, I'm sorry, we picked up 10 ticks. That put us at plus 11. Then the next trade in here, we picked up 11 more to get us to 22. Then we had a break even somewhere. No, I'm sorry, it doesn't show a break even. Then we went from, here we go. We went from 22 to 32, and then 32 to 43. So that means I had three, oh, that was 10 tick. I had two 11 tick trades, two 10 tick trades, and one 1 tick trade. And that is where we ended it this morning. Now in here, I was just explaining what this thing does. It helps you see when it pulls back. You know, we want to enter the trades when price is moving up. The retracement right here, the 50% retracement of the leg up. That's what this is showing you, where the 50% retracement of the leg up is. If you go here all the way to the end right now, this is the leg down. This is the leg down. Okay, what it's measuring from is right here down to here. It's right here down to here. The last bar is where it measures it. Okay, and it takes it from where it came out of the overbought. If you're below the YBR, it takes it from where it came out of the overbought. If you're above the YBR, it takes it from where it came out of the oversold. So right here, you see. Once you get above the YBR, that's what it does. So there was a question yesterday, I think, about it being a Donchian channel. It is not a Donchian channel. It is much more sophisticated than a Donchian channel. I can put one of those on just so you see the difference. Here's a Donchian channel. Okay, you see this right here, this bluish stuff is your Donchian channel. And what that does, if I take this off, what that does is it just goes back and it gives you like the high, low, and the midpoint of a certain number of bars back. Okay, it doesn't have anything to do with this coming out of the overbought or oversold, this being above or below the YBR, or anything like that. So it's significantly different. You can see the midpoint is very different all the way through here. Just want to point that out because somebody asked about that yesterday. And that was it for the gold for us today. The Russell, we ended up with -1 tick on the Russell. We started out with a positive trade, just a small one. Right here, got 4 ticks in profit on that one. And then we got -15 ticks on that one. That one pretty much stopped us out to the tick right here and then ran up and did what it should have done. And then at the very end, we got 10 ticks right here. 10 ticks right here. Not sure. I got that arrow pointing in the right direction here. I'm not sure. But we picked up 10 ticks on that last trade. And now you can see it's going kind of choppy in here. The range right here is really small. But before it got into that range, it came out of the overbought over here and down into the oversold, back up into the overbought. So this from here to here is where you would draw your range. All right. So at that point, the midpoint would be right in there somewhere. I don't know if I have it. The midpoint would be right there. You see it? It's really not looking like any good trades in there right now. But that was Russell. We ended up with -1 on the Russell. Now the ES, we had more trades on the ES than anything else today. And go here. The first trade on the ES we got right here. We picked up 10 ticks on that one. Then we stopped out right there, gave it all back. And then we had a trade right in there where we picked up 4 ticks. Then 2 more to get us to 6, then 1 more to get us to 7, then 4 more to get us to 11. And that is where we stopped it on the ES today. Okay. That was it. You can see we're below the YBR here now. So you would be drawing from up here, last swing high, to right here, swing low. All right, the high and low in between that area. You can see it matches up right there perfectly with the midpoint. Now we got back into the oversold, right? We got back into the overbought right here. That started it over again. That's what brought it down right here. And then it's just all crunched up. So not really good trading in there right now. And that was the ES. We ended up with +11 on the ES. Now in the NQ, we only had these few trades on this morning. We started out with this one right here. This was an aggressive short trade where it came back up and closed right there at the midpoint, and we shorted it right there at the midpoint. When it closed there, we picked up 23 ticks on that first trade. And then the next trade right here, it was an aggressive trade again on the long side. And picked up another 20 ticks there to get us to 43. And then this trade right here, we picked up another 22 ticks. Looks like 22, 32 ticks. We had 8 points. 32 ticks on that one to get us to 75. And that is where we ended it on the morning session. And you can now see everything that it was doing all the way back here. And if we go here and we flip that penguin, this one, flip that on, you can see the retracement levels when it was coming down here, from there down to there, the retracement level is right there. And then when it pulled back up and it did it again, from there down to there, your retracement level is right there. And when it did it again, from here down to here, the retracement level, well, it's 1 bar back. And I must have put it in place. The retracement level is right in here, 1 bar back, it's right in here. And that's it. That's where things stand right now. You're not at a place right here where you can take a trade now. You could have taken a trade a few minutes ago, but you can't take it right now. All right. So if anybody's got any questions, you can ask them right now. But if you're watching on YouTube and you haven't taken a free trial, go ahead to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this page where we ask for your name, your email, and your phone number. Down here at the bottom, give us your TradingView login ID and then hit register. Once you hit register, then you will, once you hit register, you will then be able to, let's just think of something, you will then be able to get your indicators indicating. Once we get the information, we'll enable your indicators and get them indicating on your charts. Get your indicators indicating on your charts. All right. All right. So let's just look at this stuff without the mid thing on. Just take that off on all of these. And we'll just look at the actual retracements as they've come together. All right. This right here, if you get a down close on this bar right here on the gold, that is a trade that you could take right there. I'm trying to get to my gold DOM so I can put it on if we do get it. I'm just going to high here 39.9 to be selling 8.9 on that. 8.9. We don't have anything you can do here on the Russell. We don't have anything you can do over here on the ES yet, and nothing you can do over here on the NQ. The NQ had his chance right here. The up close, right? Wasn't that right? Is that right? Kind of had it right there. It was pretty close. All right, so this is still, you're looking at the top of the bar, subtract 10 ticks from it. Right, the top is at 9.9, subtract 10, you're down there at 8.9. Okay. And there it is, and we're filled. All right, so now what we anticipate is going to get down here to 7.3. There's a 25 tick target down here at 6.3. 7.3 will be 15 ticks. And we have a 15 tick stop, so that works out. So we'll just let this work itself out right here. And if it goes 5 ticks into profit, 8.8 down to 8.3, we're going to bump that stop to break even. Okay, so from 8.8 down to 8.3, we'll bump that stop to break even. Now, for those of you guys that are watching, if you have not gotten into the Telegram channel, just waiting to get the shot right here. So I hit it to break even, and I'm going to show you what I'm trying to tell you. It's going to go one more tick. One more tick. It's going to go. Okay, so stop to break even on that. Now, what I was talking about was this Telegram channel right here. This right here was a trade that I did on the gold this morning, step by step. And this right here, all the yellow stuff that I was talking about, I just showed you on the ES when I was going through the ES trades. You can see what I was talking about right there this morning if you want to see it.
And you can find that video on youtube.com/CFRN, or go to X and just put in @CFRN. Boom. There it is.
@CFRN. That's all you have to do with X. Huh. I did not know
And
that.
if it's a little loud, just turn the volume down.
Yeah, sorry about that. I've been.
No, it's
My problem is
I
that it wasn't
I
loud
just
enough.
I just dialed back. You know, I just had to slide it a little bit to the left, and it was perfect.
Okay, good. Good. Well, I'd rather have that be the problem than not loud enough, because you can control the. There's a limit to how much you can
Exactly,
control the
exactly.
other side.
People can always turn it down, but if if your volume's so low, then turning it on full blast just doesn't help. So yeah.
It's funny because the last video that I did, maybe my volume was really down. Oh yeah. Oh gosh, yeah. I see what you're talking about. That was really loud.
That's okay. Better to be too loud than
You
not
know,
loud enough.
do you see that? You see all the red every time when you
Uh-huh.
say something, when
Yeah.
I say something. That's really loud.
What you
So
want
when
to
you talk,
do
it's this up here.
is you want it to go into the yellow, but not into the red. That's the
Yeah.
ideal setting. So
So that's pretty close right there. I think. I don't know. Let's see. Yeah, that's pretty good. That's pretty good right there. All right, you talk, Dwayne.
okay. Well, I
That's you right
posted
there.
some videos today, and you can find them at
You're on the bottom. I'm on the top.
youtube.com/CFRN, or go to X and just go to our channel on X at
Okay.
CFRN.
I'll just record this right now and see how it comes out. Just a little recording anyway to see how it comes out. We don't have any trades right here anyway, so let me just
And for
go through this
those
little exercise.
for those
Make
that
this
don't
just right.
know, Logic 247, where we're approaching now 20,000 alerts, we're less than 50 alerts away, got its birth on Twitter. I used to send out the alerts on Twitter, and I thought, hey, why don't I just do this for our members instead of the whole world? And Logic 247 was born. All right, I'll stop talking now.
Okay, yeah, well, I felt like I just made all the adjustments and it looks like the adjustments just went away. I don't know. I'll leave it the way it is and I'll go listen to the video.
There may be, I don't know, maybe once you set them, you gotta like save it or something. I'm not familiar with OBS. I've got it and I know how to use it, but I've never recorded anything and posted it with OBS.
Huh. Yeah, that worked out pretty well. That video did. All right. So let's see. I hate listening to myself in a video. This is all jammed up in here. We really can't do anything with this right now or this. We do have FOMC coming out here in less than an hour. So I'm glad we got this trade off and it did what it should have done. It got all the way down to the price swing though. So that's all good.
Please resist the urge to trade the Fed announcement.
Yes.
Financial suicide. Oh, you'll get lucky every now and then, but the one day you don't get lucky. So what we do has nothing to do with luck. it's all technical, rules based. So watch the action, get some popcorn, climb up in the bleachers, watch the action on the field, and when the market finally settles down to its normal rhythm, then you go back to work.
Yes. So is the announcement coming up?
2 o'clock is the
calendar.
Fed announcement, and then at 2:30, that's when we get the press conference. He'll start out with a prepared statement, then he'll take questions from the audience.
Yeah. So 2:30 is the press conference. So whatever happens in this time here usually is undone by this period right here. I mean, by reversed is what I mean. So what happens here is usually reversed by what happens here. Usually. I don't know if that's going to be the case today, but that's how it usually works out.
One thing I can tell you is if his prepared statement or his Q&A leads to the fact that we're not going to get at least 2 rate cuts this year, the market is going to drop like a rock. And I already explained to you earlier why this is the rally that Wall Street hates, because it's been so unpredictable, even though we're hovering near all-time highs.
We nailed that right there, though, didn't we?
Yeah, we did. Yes, we did.
It's tough right now. We closed back up above the BBC here, but we didn't keep going up. We should have kept going up right there.
Once balloon climbing gets directly above price, it becomes resistance, because it's probably on its way to becoming red and falling. And now we've held the last three pullbacks to the BBC. Right where the bullish cross was there, Michael? To your left.
Oh, yeah, the bullish cross is this one right here.
See that first pullback held? And then the second one, which was a red candle. And then that one. And then I guess we've held 4 pullbacks.
Well, in the middle of it.
That one just opened right.
Yeah,
so that was a pullback.
Right.
That ran right up to resistance.
Yep. And so being held in by that right now. And if you look this way at this.
Oh, and what a beautiful opportunity to show right here. Well, no, that's all right. I'll show it later. It's too hard to explain.
Okay. I'm sort of showing, we have an inverted head and shoulder pattern. This is the head. This is the shoulder. This is the other shoulder. So you have this right here and this right here converging. And that's where we are. Right in this period right here. This is kind of a rough drawing, but that's where we are right in this spot. I think it's going to be significant. I don't know what's going to make it move, but when it breaks away from this spot right here, I'll draw it with the real trend line.
Okay. Then what's going to happen is we're going to run into that previous bearish cross.
See that? That's
which is around, well, you see where the, right there. Yep, when price gets there, you should expect that to be good resistance, at least the first time up.
There. So there's a confluence. The confluence of stuff right here. And it's going to have some trouble getting through that. If we do get through that, though, we should be off to the races. I mean, all-time highs and stuff like that will be coming up pretty quickly. This is all-time highs right here, I think.
December 6th was the all-time historic high of last year. December 6th of last year.
Yeah, that's it right there. So it's just, I was on December 4th, 5th, 6th right here.
Yep. Now that was on the M contract, so now that we're on the U contract, it may be a different day. That was the all-time high.
Yeah, it should be pretty close. It's right in there, that area right over there. But that's good. That's the markets just have a way of coming together,
Once you learn to read the chart, guys, it's a beautiful thing. It's like art. I mean, you look into the future and you go, well, if this does this, then the highest probability is for it to then do this. And you see it happen again and again and again. But remember, out of those 19,950 plus alerts, what we averaged on a weekly basis was 20% or less getting stopped out. So while we don't know what the market's going to do next, we know what the next high probability thing is. Sometimes it just doesn't do what we think it's going to do. Most of the time it does.
We need an up close here on the gold. We need 2 up closes here. We need 2 up closes here. We need at least 2 up closes here. A 1 up close here on the gold would be a spot you could actually trade. It's got a low here.
Short.
7.8 up to 8.8. So you see the way you can do that. That would be an aggressive short. If it closes up, this should go into the overbought and be right there at the midpoint. Actually, be a little bit above it. It's not exactly the right spot, but it's pretty close. It would be an aggressive short. And you can put it on by having a sell stop. A sell limit order right there. Right, so it closed up and it didn't fill me, so I can take the order right here. I can get filled. It should have filled me right there. There it is. Okay, so right here, we just shorted it right there. Right, so what we anticipate is that it's going to get all the way down here right now. There it
And
goes. It's got to go.
And that's where your target's at, right?
Yep. The
34.06.
target is 6. Yep, 6. Yeah, 6.0. The target's actually a little over. It's down here, but the target is like this leg length right here, right now.
Mm-hmm.
Okay, so it's got to go down one more tick, and we'll bump the stop to break even. And come on, push the yellow down there. The yellow's got to go down one more tick. There it goes. Okay, stop to break even. And now we anticipate what you should anticipate when you have a trade like this. Is this? Let me do this always on top. Let me draw it for you. This is your leg length. Oops, it's kind of wiggly leg length, but that's your leg length.
And he has 0 risk on the trade.
I do.
Because he's moved his stop to break even. Or,
right.
Yeah.
I'm locking the tick right now. And so I'm not going to lose any money on this trade. I anticipate it's going to get down to right here at 6.9 at least, to 6.9 right there. Okay. But we have 0 risk on the trade now. And we're now waiting for pullbacks on all these other markets right now. This one got stretched out a little more. This one got stretched out a little more. And we're out with 1 tick over there on the gold. Okay, now I could have taken 5 ticks on that at one point, but I was letting it ride a little bit. One more there. So we've had 2 profitable trades on gold. Though they're small profits, they're both profits. And we have 2 minutes left in this session. 2 minutes. I need the down close here. And see, it's stretching it out over here. Just keep stretching it and stretching it. There and there and over here.
John B. over in YouTube, he wants to know, he says crude has been trading really well lately. Have you checked it out or traded it? Or?
Well, I haven't, but let's just go to the crude Q contract here.
No, we're in the N.
Crude.
I'm still on the N.
LMN.
I hope I'm in the right contract. Everything looks right, so.
I'll go to N. Okay, so this is what it looks like on the crude 9 range. It actually looks pretty tradable here on the 9 range crude. You might even want to go up a little bit because it's.
Did I tell you about? I tell you about the miss on the crude numbers.
Yeah, the inventories. That's right. We had the inventories come up today.
The analyst called for a draw of 1.8 million barrels. We got a draw of 11.8 million barrels. Swing and a miss.
Off by only a factor of 10.
John says Q is the front month. Okay, thanks, John. I guess I'll roll my crude tonight to Q. You were right.
Well, let's go there to Q then. All right, I thought it was probably the same as the gold. So this is on the 19 range right here. All right, so what you would be looking for right here is in here, you'd be looking for it to pull back to there. But before that, right here, where it broke the YBR right there, you'd been looking for it to pull back to right here, midpoint right in there. Just easy. Okay. Yeah, so we'd be looking for a pullback in here right now. We want that to get into the oversold when it's at or near the midpoint. Like this one right here, when it got into the oversold right here, it was at or near the midpoint. It wasn't there. I wouldn't have done that because it was close enough. But that's what you're looking for. Okay. So it is pretty tradable, and that's on the 19 range. If I go down to the 9 range, then well, in the same sequence here, where you're coming out of the oversold and going back into the oversold, this is how big it was. So you never got the pullback that would have given you a trade in there. You never had to do a pull. It would have been here somewhere. But this one's pretty close right now. Right in here, you would have gone from here up to here. And so that was pretty close to having a trade right there. And now you can see it's gone down here, so you have to do it again. This time it's gone from, because it went through the 50% and it's going down to 100%. I still have to use this retracement level right here, or just wait until you have another leg length. Okay, John. The gold is finally working its way down over here, and these other guys, they haven't stopped tanking yet. All these indices. So we'll see. Two more rate changes before the end of the year. He hasn't done one in all the years. So I doubt we're going to see that. I think he doesn't care anymore. Anyway, that's it, guys. It is 1:31. I'm going to wrap it up. I have more readings to go after today. So if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you here. Fill out this form. Once you fill it out, hit the register button, and you'll be sent everything you need to get into the room in the morning.
Now, we'll get your indicators up and running today, but tomorrow's a holiday, so your trial will officially start Friday, but you'll still get 5 consecutive trading days. The weekend won't count against you.
That is correct. All right. So I added this other calendar in here for you. All right. This is when the
nice.
We'll see it's coming out. But I added this one in here. If you click on this, it brings you right to this.
Mm-hmm.
Okay. I added that because I actually like that calendar better than this one. But I couldn't get that one up to this page. And that's it, guys. With that, I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. It's ready. It's on the way out.
Okie doke. Recap of the morning session.
Today, it took 12 minutes and one trade to get to $1,150.
Good job. Now, is that gold trade I posted the video of?
No, it wasn't. Actually, it was an NQ trade.
Oh, okay.
Yeah.
All right.
It's an NQ trade. 23 ticks on an NQ trade.
Gotcha. All right, guys. This is where we left off on this recap. And let me just throw some volume on here. Oh, why didn't that work? Maybe they don't provide volume anymore. Oh, I just didn't click it properly. Okay, so this is 30 minutes. Here, let's just switch to a daily for a second. And so far today, we've traded 173,000 contracts on the end contract. So I will go ahead and roll this afternoon to the Q, because we can see it starting to taper off volume wise. So again, thanks John B for pointing that out. Let me go back to the 30-minute. So it's definitely still tradable today. All right. And let me get rid of the volume. Remove volume. Yes. Okay. So this was the opening candle last night on crude. It did not fill the window on this initial foray. It did move far enough to get your goal for the day. So see, we don't sweep anything under the carpet. Okay, I showed you all the windows that filled and how many times they filled. Well, this one didn't fill all the way. It made another run to fill the window over here, and it came a little shy. If I rolled it to the Q, it would probably be filled on both of them. Well, let me walk through this first, okay? So we ran into resistance, came back to the BVC, the pullback held, and then we ran into resistance at red and falling. We consolidated at the BBC, and then we dropped to here, which is right here. Look at how the step line, it had gotten on the right side of blue and climbing, and right here it crossed back. That creates an important price, important area. The market found support there. And then we almost filled the window there, but not quite. And then we dropped like a rock. That's when I guess the crude inventories came out. Although they came out at 10:30. But anyway, this is 10 o'clock. So we dropped right to the zone that was published Monday morning at 6:15 a.m. Eastern, found support, and it bounced us, and we've actually traded through the BBC. But what I'm going to do, now that I've explained all of that, I'm going to go ahead and roll this now so I don't forget this afternoon, because I'll probably be in a rush. Got company. Okay, so no, it's much different with the Q. Prices are lower, not higher. So we're consolidating. If it had been on the Q contract last night, we found support at the zone, and then we dipped below, and we made a rally, and we took out the early night highs right here by just a little bit. Always suspicious. And then crude inventories, I guess this was got to be the candle that came out. And then we bounced up to the BBC. We've now hit the zone, which we expect to be resistance, till proven otherwise. And the zone is 7330/35, and it reached up to touch the underside of the target, which, as I've told you, when you trade through a short target or a long target and price goes into its retracement, it'll usually come back, in this case, like to the underside. If we had traded through the long target, often the pullback, top of the long target will become support. Okay. All right, so now we can go to gold. And we drew both of these windows live on the broadcast yesterday, and we filled, and we filled a second time. And we drew this one live yesterday. And this red candle opened here, continued down to the bottom of the window, but then ended up closing back above the short target, which took us all the way up to the long target, to the tick. That resistance sends the market looking for support, which it found at the short target. Support sends it to resistance at the zone, which sends it back to support at the short target. And support sent it for resistance, and it didn't quite make it. So I'm thinking we may trade through the BBC right here. And if we do, there you go. Although we're so close to the Fed, you should be really careful. Okay, that is a short window of opportunity. Okay, and then yeah, I'll leave it at that. Silver. Well, silver got a big, beautiful window of opportunity right here. Now, we drew this window yesterday live during the broadcast, and it filled at 10 o'clock this morning. We drew it yesterday at about this time. We also drew this long window yesterday, and that filled finally at 2 a.m. probably while you were sleeping. Okay, now if see, red and falling's gotten directly below price, so that now is actual support. The step line is crossed to the right side, so we got resistance times 2, the zone and the BBC. But if for whatever reason we trade above it, there's your long window of opportunity. Now remember, it only takes 2 pennies to get your goal for the day. So this would be 37.13 up to 37.17. So that'd be $200 per contract traded. The short would be 36.80 down to 72. That's $400 per contract traded. Both of the windows from yesterday filled, and so we'll see what happens with these two when we come back Friday. Again, we're off tomorrow. So I've done an in-depth, granular recap of each individual market. So if you missed the first part of the broadcast, you can always, about an hour after I sign off, go to youtube.com/CFRN, and under the live tab, you'll find today's broadcast in its entirety. Okay. So this long never filled, and this short, oh, we came down just to the top of the window. Now, when you create these windows of opportunity, what you want to do is, as price approaches the window, look at your range chart, okay, so that you make sure you're getting in with the flow of the market. Probably right here. Your smaller time frame would have kept you out of this trade where price turned back up. So this is still a valid window here. And if price, yeah, because you got potential resistance here, here. I'll just stay with that long up there. Dow. Okay. On the Dow, got a nice short window right here. You only need 20 points on the Dow to get your goal for the day. And what are we talking? 42.830. Well, actually going long. So 810 to 830. That's your 20 points. That's your goal for the day. And then down here, you got, let's go 42.580 down to 42.540. Okay. And that would be your goal for the day times 2. The Russell, you got a bullish cross right here. And you got this little crevice here. So I'd be cautious. Let's see if we can conservatively find 2 points here. You definitely want to be out before you hit that bullish cross, because that's going to probably be support. That's if price comes down. So at entry, what's this low? 26. Okay. So we need to bring this down to 28. Because I don't want to be too close to that BBC. I go a little further. That's good. Okay, now is the top of the window 28? Nope, still not quite. A little bit more. Just remember, it's 28 to 26. You're in at 28, out at 26, because you expect there to be support here. Now, price trades through that bullish cross. Then, right here where the color changes, that's potential support, where red turned to blue. So could we eke out another 2 points here down to the zone? Zone's 2118, 2117/18. So we would be getting in at 2120. Yeah. Alright, just remember, this isn't drawn properly. Just remember 2120 to 2118. Here, I'll type it in or else I won't remember tomorrow. 2120 to 2118. There we go. All right. So and then this long that we drew in yesterday, based off Monday's price action, uh, that's still the best long potential as far as market structure goes. I would try to drag it over, but probably mess it up. Okay. So we'll be looking at that Friday when we come back. Now, Juneteenth is only a U.S. holiday, so European markets and stuff will be open. Globex open tonight. It'll be kind of quiet holiday trade. So I may put out CTAs and logic alerts tonight. I don't know. We're so close to that 20,000 round number, and as I've told you for days, I don't know what I'm going to do once we hit 20,000. So maybe I'll just save any more logic alerts for Thursday night, because we're going to have a full session on Friday. And I'm going to the Bluegrass Festival in Prescott. It's free. Oh, we joined this travel club. Oh my gosh. It saved us a whopping $8 off the public price of our room. I don't want to talk about it. All right. Did we already do the NQ? No, I guess we didn't. I don't like nothing. I know that seems way up there, but you got all these areas for potential resistance. So, well, we could do a long there. And that's actually enough. So you would get in at roughly 22,113 and be out at 23. Be out at 23, so I gotta bump that up just a little bit. Not too much. Just want to get it up to 23. Okay. Now, that doesn't look like much, but from 13 to 23, that's 10 points at $20 a point. That's $200 per contract traded. Now, the short is pretty easy and obvious. But you got to make sure that I'm not going to be able to do it with that circle there. Get rid of that. See, the top has to come below. Oh, I'm pulling the wrong button. Come on. All right. Too much, of course. Oh, and I just moved 21,871. 21,871. Get the zone back in the right place. Okay. So what I'm trying to say is 82 to 72. Let me just write it in so I don't have to spend time. 82 to 72. Okay. Now that's 10 points, so that would be $200 per contract traded. Okay. So you got to get below that low, and then you got to expect support at the zone till proven otherwise. Okay. Just like we had support at the zone, and we have resistance at the zone. Crude. Well, Here's a long opportunity. Get in at 73.70. That's $300 per contract traded right there. On the short side. $71.60 to $71.40. Yeah, that's $200 per contract traded. $71.60, $71.40. $200 per contract traded right there. Gold, about to enter possibly the short window, and any kind of long would have to be like way up here, but a valid opportunity is a valid opportunity. So we're talking 34, 33 to 35. That's $200 per contract traded. Okay. And on this one, remember, it was a red candle. Then this candle opened, and it was red to the bottom of the window. And then buyers came in and pushed it back up, turning it into a green candle. That was fine, and that was fine. And we already did silver, right? Yep. All right. That's the best of all I got. And price is still trapped between major support and major resistance. With blue and climbing directly above price, that's potential resistance. The step lines directly above price is potential resistance. And of course the BBC is potential support. Okay. Now, if you're ready to become a trader, go to mytradingiq.com. Watch the videos, read the content, send an email to support@cfrn.net. And just say, I'm ready to become a member. Valerie will send you an info-packed email that explains everything it means to be a member, a passport holder, and she'll provide a link you can click. And if you're a veteran, when you say I want to become a member, say I'm also a vet, and we'll give you an additional discount. Hang on one second. Okay, all right. She's going to send you the email. There's going to be a link you can click, and if you're a vet, we'll give you a little discount, okay? Because we are patriotic, if nothing else. As a passport holder, the first thing you're going to pay attention to is the live training room. 2 hours every trading day. Real trades with real money in real time. As Michael is putting on and taking off trades, he explains every move he makes, every trade he takes, and you see the results live in real time. We sweep nothing under the carpet. And your questions are not an interruption of the process. Your questions are the purpose of the process. So never worry about interrupting. Just type your question in. And because it's rules-based trading, after a couple weeks, you'll find yourself asking the same question a second time or a third time, and each time you're going to get the exact same answer, usually verbatim, okay? And pretty soon, that knowledge will become your knowledge, okay? 9 out of 10 new traders fail simply because they don't have anyone to teach them how to trade. You can buy books all day long, watch videos all day long. You can join some rooms with grumpy gurus, and I'm sure you've all been through that torture. But if you want a cheerful, uplifting experience, we got what you're looking for. See, Michael and I, we went through all the garbage together, and we said, we were daydreaming, and we said, someday, once we really get this thing nailed, we're going to create a place for people on the internet where they'll be treated with dignity and respect and actually be taught how to trade. Now, even though we give you all the info, all the training, and all the tools, what you do with them, we have no control over. You have to bring to the table patience and self-discipline. So while Michael's trading in the morning, you're trading along in your demo account so you can qualify to go live and start trading real money. When you become a member, you just don't instantly start trading real money because you haven't learned the strategy and the methodology and how to read the indicators yet. Okay? Well, how long will that take? It's different for each person. Depends on how much trading experience you have. Sometimes the people who have zero trading experience get there the fastest. Those who've been trying to do this for 5, 6, 7, 10 years, we got to break all your bad habits before we can instill good habits. 2 hours live training every trading day. On top of that, private one-on-one mentoring as you request. The strategy you own, or the strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just how markets work. As a passport holder, you're going to get the Logic 247 alerts around the clock. For now. You're going to get the concierge trade alerts 5 minutes before the market opens each night. Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And on Thursday afternoons, you'll get an invitation to attend the members only workshop Thursday night at 8 p.m. Eastern. And if that weren't enough, you'll also get the golden key that opens all the private channels in Telegram. When you're on the trial, we have public channels for you so you can talk to our traders and ask them how their journey's been and are they happy with what they spent to become a member. And we have so many good people, and they're happy to answer your questions and share with you what their journey's been like. But once you become a passport holder, you'll also have access to all the private channels. And we got quite a few. Really, the Telegram channels are kind of the heartbeat of our community. So whether you're on the trial or a member, make sure you get Telegram installed. It's free, it's fast, it's secure. And once you have it installed, Valerie's going to send you all the links. You click it once, and now you're a member of that channel. It's very simple. Everything a trader needs, all under one roof, at one low price. There's no gotchas, none of that nonsense. Okay, time to wrap it up with our good word for today. Have a God perspective. Just think about what I said. Have a God perspective. That doesn't mean that you become God. But it means that you begin to see the world through the eyes of God. You feel with God's heart. You have this supernatural compassion for people that are hurting and in need. It's an amazing transformation. When you become a true believer and follow in the steps of Jesus, your mind is renewed and your heart is transformed. In writing to the church at Corinth, Paul reflects on the cost of serving Jesus. From the Jews, 5 times I received 40 stripes minus 1. 3 times I was beaten with rods. Once I was stoned. 3 times I was shipwrecked. A night and a day I have been in the deep. In journeys often, in perils of water, in perils of robbers, in perils of my own countrymen, in perils of the Gentiles, in perils in the city, in perils in the wilderness, in perils in the sea, in perils among false brethren, in weariness and toil, in sleeplessness often, in hunger and thirst, in fastings often, in cold and nakedness. 2 Corinthians 11, 24 through 27. What enabled him? Now this is Paul, who was once Saul, until he had his encounter with Jesus on the road to Damascus. What enabled him to live above all of his problems rather than be crushed under them? Well, the answer is in today's title. He had a God perspective. Therefore, we do not lose heart. Even though our outward man is perishing, yet the inward man is being renewed day by day. For our light affliction, which is but for a moment, is working for us a far more exceeding and eternal weight of glory. While we do not look at the things which are seen, but at the things which are not seen. For the things which are seen are temporary, but the things which are not seen are eternal. 2 Corinthians 4:16. Paul processed things differently. When he had nothing materially, he believed, "My God shall supply all your needs according to his riches and glory by Christ Jesus." Philippians 4:19. When facing the executor's chopping block, he wrote, "Having a desire to depart and be with Christ, which is far better." Philippians 1:23. So friends, today, ask God to give you his perspective on everything. You can thank me later. Thank him first. And that's our good word for today. One last time, we won't be here tomorrow. It's Juneteenth. But we'll be back Friday. Okay? Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.